Hi, I'm Jacob Ford, investment specialist here at Tortoise Capital, and today I'm being joined by Senior Portfolio Manager Brian Kessens for another one of our Energy Quick Take in 10. So energy continues to be at the center of some of the biggest themes in the market right now, from geopolitics to AI power-driven demand. So today we're going to unpack what moved the markets this month and what it means going forward. So Brian, thank you so much. It's great to have you on.
Yeah, it's my pleasure.
So obviously, Iran has clearly taken center stage in March, had a major impact on energy prices. So give us the big picture. What does it mean for energy prices, supply, just overall market sentiment?
Yeah, it's been quite a month. I've been investing in energy nearly 20 years now, and this month might have been the most interesting, to say the least, as it relates to energy markets, because we've seen so much disruption as it relates to energy supplies. Obviously, the Strait of Hormuz has been very much in the spotlight over the course of the past month. How it's effectively closed right now. So what does that mean? Roughly 8 to 10 million barrels, as near as we could tell, of crude oil are simply offline. They're not making their way to world markets, which is about 10% of that is supplied to the world. But not only is crude oil disrupted, refined products, gasoline, diesel also move through the strait. They're disrupted. And then maybe one thing that's a little bit under the radar is natural gas in the form of liquefied natural gas, or LNG, where Qatar's facility is essentially shut down right now because they're not able to export any natural gas or LNG through the strait. And they provide about 20% of the global supply of LNG to the market. So if you're a country that is importing natural gas, your natural gas prices have significantly moved higher. As an example, Europe has seen their natural gas prices move higher by about 75% just over the course of the past month. Different here in the U.S., where we're an exporter of natural gas. We're from a natural gas perspective really not impacted, where our gas is actually flat month over month and continues to really be driven by how cold the weather is, how hot the weather is, more than with anything else. Speaking of crude oil, as we started at the beginning, significant moves there. WTI, the U.S. benchmark, moved from roughly $67 to about $100 per barrel, so 50% move in WTI. Brent, which is the international price for crude oil, was up even more. It started the month at about 72, and we actually ended the month at $112 per barrel. One interesting thing there is you can see that the spread between WTI and Brent, it almost doubled, or actually more than doubled, alone just over the course of the past month. What all that means, I think, at the end of the day, is it just has a renewed focus globally on energy security. It's kind of started with the war, Russia's war in Ukraine, and then this just cemented how energy security is kind of a big priority as it relates to energy today.
That's fascinating. So with this disruption to global supply, does that mean that the U.S. is now going to be in a good position to help, increase exports?
Yeah. It's a great question. And certainly we have a competitive advantage in that we're, for the most part, energy independent, and we are an exporter. That said, we are already exporting about 4 million barrels per day of crude oil. And don't have an ability to do much more than that. We're already exporting about 2 million barrels per day between gasoline and diesel. And refinery utilization was already in the low 90s. So there's not a big ability to export even more gasoline or diesel, although certainly the refining would like to, because their margins are up significantly over the past month. So not a lot there. On the LNG side, the U.S. continues to be the world's leader in the export of LNG. We're just a little bit shy of 20 BCF per day. But again, those facilities are operating pretty much at or even above benchmark capacity. And in some cases, if there is one bright spot from the U.S.'s ability to export more, it is the Golden Pass LNG export facility. It's been under construction in the past couple of years. It's owned by Qatar and Exxon. And it actually just came online today. It started to export LNG today. And over the next month, we expect it to ramp up to about 1 BCF per day. So that's about 5% of all U.S. LNG exports. It also represents about 10% that is offline from Qatar and the Persian Gulf. So, is it solve the problem? No, but it is a step in the right direction.
Oh, that's some super timely news. So that's a great backdrop for what's going on with the physical commodities. But how does this trickle down, if you will, to be specifically with energy stocks?
Yeah. All comes down to stock prices, price, right? So stock prices, no surprise, energy stocks have moved higher over the course of the last month. The XLE, or all the energy companies that are in the S&P 500, had a pretty good month. It was up about 10%, as you might expect. Utilities actually were down about 3%. They're really not impacted, frankly, by what's going on in Iran whatsoever. Refiners, I mentioned refiners. Valero, one of the largest U.S. refiners, particularly along the Gulf Coast, was up about 20% during the quarter. Outstanding performance there. Midstream companies, steady cash flows, not taking any commodity price risk for the most part. So you would expect them not be up 10% that the broader energy was, but midstream was still up about 3 to 4%. So it's still very strong. Interestingly, services only up about 1%. But in general, pretty good absolute returns. Especially actually when you look relative, the S&P 500 was actually down 5%. So the relative was up even more than the absolute. We did get some questions about, hey, crude oil being up 50%. Seems like maybe energy should have performed, even better in this situation. I think we just have to remind ourselves, we actually had a pretty good start to the year. January and February were really good for energy returns as well. So maybe some of this this geopolitical risk was already kind of forecasted at the start of the year. And certainly we had a good March, but maybe up not quite as much as what people would have expected, because a pretty good start.
Okay, very good. So beyond the geopolitical headlines, Brian, was there anything that generally surprised you this month?
Yeah. The one thing I will say, I just talked about service stocks. If you think service stocks, you think, oil prices are higher. They move even more than the producers do traditionally with oil prices. But services only up about 1%. I think the reason for that is the U.S. producers have continued to say we're going to be pretty capital disciplined going forward. So that surprised me. And then there was one tanker that actually moved into the Persian Gulf. Not sure what that ship captain is thinking, but maybe he does more than we do.
Yeah, excellent. So let's think way back to the beginning of the year, before Iran was a big story. AI electricity demand was kind of the big talking point. It's really the defining theme in energy. So did March bring anything new to this story, or has it strengthened the case for natural gas power infrastructure, or do you see anything related to those?
Yeah. Just one thing is someone's playing catch up. The Energy Information Agency, or the EIA, actually has now come out with their expectations for in the PJM region and in ERCOT, which is in Texas, about how electricity demand is going to grow over the next couple of years. And ERCOT specifically, they have 10% growth expected. And they've come out now and said that they expect most of that generation, the growth in generation to meet that's going to come from natural gas. And they're expecting natural gas generation growth to actually move higher by 7%. So just good to see the EIA kind of catching up with where we've been all along for the most part.
Excellent. Good stuff. So let's look ahead to next month. That's going to put us right in the middle of earnings seasons. What are you listening for?
Yeah. The producers, I touched on it a little bit. We're listening for, are they actually going to increase CapEx to take advantage of some of the higher prices? I will say the forward curve 2027 is only a little bit below 70. What price do they actually need to see before they'll actually add rigs? I think is one thing that we're going to listen for. Midstream, I think there's some outsized opportunities maybe to take advantage of some spreads. I think that'll be interesting. Refiners, frankly, we're talking billions of dollars in outsized opportunity here because of the wide Brent spread to WTI and the fact that natural gas is a key input, and that's an advantage relative to the rest of the world. So I think refining earnings should be pretty good to the point.
Good stuff. Brian, that was a great breakdown. Thank you so much. There's a lot of moving pieces, but I think this has been a great way to frame, what really matters and what to watch for from here. So thank you to everyone for tuning in. If you want to continue the conversation or talk through how, this might fit into portfolios, please let us know. We are always happy to connect. And until next time, we'll talk to you then.